Okay, I'm trying to stream this just to the YouTube. Okay, assets. All right, good to go. All right, okay, now let's get started. Okay, good evening, leaders. I'm very, very sorry for coming up late, but let us explain. Basically, so many people use this as an independent indicator, but me, I don't use it as an independent indicator to help me get good results, all right? So let me first clear my screen. We shall press in these other indicators later. Okay. Now, first and foremost, I think I've greeted all of you. Happy to have you here. All right, let's get into this a little bit. Okay. Now, the Elliott wave is a strategy that was developed very long time ago in 1930s. Now it was developed by this one. This is a person, Elliott, or Elliott. The way you speak, it doesn't matter. Now this strategy or this wave has what we call waves. It has what we call the main waves, and it has what we call the sub waves. Now the main waves are divided into two. They are divided into what we call the motives and the corrective. Now, let me take you through that. When we tap on the indicator and we come on its settings, it has the motives. Here we have the motive and the what? The corrective. Also, the subwaves have the motive and the corrective. Now, when we return back the subwaves, let me return my subwaves back so that you can see. Now, these are subwaves. When I press OK, you'll find that they may not show here, but they may show in another indicator that every wave, this wave, what is a wave? From here to here, this is one. This is one. From here to here, let me change the color. This is two. Now, from here to here. No. What's up? What has happened? Have I changed my settings? Oh, no. I needed to widen it a little bit so that it becomes very clear. Hope I didn't change up this. Not inverted. Okay. All right. Okay, it's fine. Okay, let me open it again. Maybe I over squeezed it a little bit. I needed to find a way of making my waves clear. All right. I hope this is better. That time it was a little bit confusing because of over squeezing. Now it's clear. Let me repeat again. From here to here, it is one. From that red mark to here, it is two. From here to the other upper part is three. I hope now it comes out very clearly, all right? So from this corner here to here, it is three. Then from that red corner to here, it is four. And from this red corner here to the other upper part is five. So the motive ones, one, 2, 3, 4, and 5. These are the motive ones in the main waves. Now, I will remove the subwaves because each wave you see, wave 1 has 5 subwaves, wave 2 has 5 subwaves, wave 3 has 5 subwaves, wave 4 has 5 subwaves, and wave 5 has 5 subwaves. That's why, to avoid confusion, I tap on this, then I come back on these subwaves and I remove them, so that I remain with only the main waves. Then I save as default. Now, let us understand the waves now. Let me try to make them clear, like you can see them very clearly. Now, 1 is bullish. 1 is bullish. Bullish meaning it is an up trend. From here to here, it's an uptrend. Let's go to 2. 2 is bearish. From where 1 has stopped, because for this wave to give you clarity, it forms the wave first, like you see here. It first forms the waves, then it numbers it. It forms the wave, then it numbers it. Now 2 is bearish. And you can see very clearly from here, it moves down here, it is bearish. It means it's a downward trend. Then let us go to wave 2. You see wave 2? Now, this was 2. We are done with 1 and 2. This was 1. This was 2. Now we are going on 3. Now you see, it gives you a 2 here. Then 3 is this one. From this one is 3. Now 3 is bullish. 1 is bullish. 2 is bearish. Bear. 3 is bullish. Then 4 is bearish. From 3 coming down here. From 3 coming down here, it is bearish. From here, oh no, please. 4 is bearish and 5 is bullish. Are we okay with the first 4, with the first 5s before I go to the corrective ones? Are we okay? Let me know in the chat. You can even unmute.
I didn't get this one just now.
Do we understand the first one? It's not a hard one. I don't know. Hello?
Can you repeat what you said just now, please?
Now I'm asking, have you understood the first 5 main waves?
Yes.
Yes, it's clear. It's clear.
Okay. All right. So it's very important. Okay, now it's as simple as just knowing that 1, like you have seen, I just increased it a little bit so that we can get it very clear. 1 is bullish, 2 is bearish, 3 is bullish, 4 is bearish, and 5 is bullish. Now, before I continue with these waves, allow me to tell you the 3 unbreakable rules. These rules can never be broken. These rules, they are a must. Like, I don't know how to express it to you. They are intent rules. They are rules that can never be changed. And these are the rules of the Elton wave, right? So let me get you to know these 3 rules so that it becomes very clear for you as we enjoy the second what? The second wave, right? Just a minute. I'm trying to make sure that my notes are okay. Now, rule number 1. Wave 2. Let me make this very, very clear. Let me try to. Okay, let me try to. Because when we fix the waves, you may not get it. All right. Rule number 1, wave 2, which starts from here to here, can never retrace 100 of the first wave. It can never touch this line. It's just a rule. It's a rule. So when you enter from here and forget to get out of the market and the market comes down, it can never get back to your entry price. So be comfortable while you are in. Rule number 1, wave 2 cannot retrace. This wave cannot come back to this point here. This wave, this one. It can never come back 100%. Let me change the color to this one. That is rule number 1. Rule number 2. The third wave can never be the shortest. This one, wave number 3, which is this one that starts from here to here, which is wave number 3. It can never be the shortest of wave number 1, 3, and 5. Remember, these are the bullish waves. Wave number 1 is bullish, 3 is bullish, and 5 is bullish. But of the 3, wave number 3 can never be the shortest. It usually be the longest wave. Rule the last rule of this wave. The last rule of this wave. I want to pull it down now. So like you see, when we press it like this, you may think that the 5th wave is the longest because the 3rd wave looks shortest. But when we bring out the clarity of the waves, wave number 3 can never be the shortest. Of the 3. Let me try to see if this can bring out what I'm talking about. May not come out very well, but it can never be the shortest, wave number 3, unless there is a market manipulation. So let us go to the last wave. Wave number 4 can never go beyond the 3rd wave. If this is wave number 4, like you see it down here, this one here, it can never, wave number 4 can never go beyond wave number 3. This wave here cannot come down back here. It cannot come down back here, where it started from. Okay. Now, let's go to the collective waves. Now, after the market has formed, wave number 5, it forms the collective waves. And these ones fill up the gaps that were not filled by the motive waves. And these are A, B, and C. This is A, this is B, and this is C. All right. Now, A starts from here, from 5. Here to here, it is A. Here to here, it's B. Here to here, it is C. So what is A? A is bearish, B is bullish, and C is bearish. Now, those are our waves. There is nothing more. Those are our waves. I don't know if there is a question so far before we add in other few indicators to help us.
Yeah, what time frame is better to check these waves?
Time frame.
Yes.
You can decide to there is no specific time frame,
Okay.
because the time frame depends on how long you want to stay in the market.
To stay in the market. Okay. Okay.
And how much profit you want to take from the market. If you go in for the 4-hour time frame, you will always take bigger profit. When you go in for the 1-hour time frame, you'll always take little profit.
Okay.
All right.
Thank
Okay.
you.
Please read the corrective wave again. I didn't get that corrective.
The corrective waves fill up the gaps of the motive. So the corrective is made up of 3 waves. This is A, this is B, and this is C. So A is bearish, B is bullish, and C is bearish. Are we okay now?
Yes, thank you.
All right. Now, for us to get perfect stay in the market, because, for example, I want you to see this. This coin can pretend as if it's going to go down, right? Then it produces a green candle and it pushes this still up, and maybe you miss out on some profit. Although, what you could do to never miss out on profit, I just get my horizontal line and I draw a horizontal line here. All right, that is 0.877, right? I could even go a little bit higher, and I draw my horizontal line around here, which is 0.09939. So what do? I go on my Royal Queue, and I come here on price alerts. I look for MDX, which is already here. I set up a price, which is 0.08093. Okay, 939. So once the market will touch this price, Royal Q will give me an alert. But like I've said, that using this indicator alone is deadly because it may not show you the movement of the market. So the best strategy is to put in the auto FBR retracement indicator to give you areas of confluence, or what you call areas of price action, what you could call entry in the market. Okay, now these areas of confluence help you decide whether to keep trading this coin or to get out of this coin. For example, this indicator has important areas that you must know, especially the auto FBR retracement line. You test it and see if it works. All right. Rule number 1. When 100 is down and 0 is on top, it is an upward trend. What do we mean by an upward trend? We mean that if the market is going to move up, it's going to move up in this direction. So when you draw a line, you'll find the market is not penetrating, going lower than this. Could be higher lows if we maybe are using the ABC, and higher highs, or higher lows and lower highs. It doesn't matter, but find that would be the upward trend of the market. But you have seen that in the upward trend, the market moves up, moves down, moves up, moves down, moves up, but that is the sequence of the market. So it means that the market will always move up. But if the market moves from 100 and it touches the 0 line, it has to retrace 50% of its journey, which is between 50 and 60 line. Let me make my lines clear. Just a minute. I want to make my lines clear. All right. All right. So the market will retrace 50% of its journey, meaning between the 50 and the 61, which is here, around here, the market will move from up there, unless there's a market manipulation. Touch come in between, it can stop you on 50. Yes, it can stop you on 50. It can even stop here on 61. Then after it moves back to 0. So that's why you may not take all that profit, because if we measure from where I've drawn the line using the price range from here, then it gets back here. It could seem like too much profit, but you can take up to there, which is 5%. Remember, our take profit depends on how much amount of money we have invested. If you have put in $10,000, you want to get out of the market as fast as possible. You don't want to stay longer in the market. You want to make sure that once you get in the market as fast as possible, you get out of the what? Out of the, you don't want to stay in the market long. All right, you don't want to stay in the market longer. It is your goal that you get out of the market as fast as what? As possible. Okay, that is important area number 1. Important area number 2. For example, when a candle closes, you see now these lines act as support and resistance. These lines, they act as support and resistance. For example, you will see that. I want you to just note it if you can follow through and see it very well. That now, since the market has crossed below this line, its resistance is on this line. So it might come, hit this line, then try to go up a little bit, then comes down, or it might move straight down to this area here in between, and then it goes up. So that's why we use this indicator. I hope that is very clear. Someone has a question about this combination? Anyone has a question about this combination?
Yes, honestly, I'm lost.
Okay. All right, okay. This is what I mean.
Added the other one, the retracement line. I got lost.
When I added the retracement, huh?
Yeah. Mm-hmm.
Okay, now let me remove the Elton wave file.
Wait, sorry, let me ask a question so that this ABC now, that's the corrective wave now. This one you remove right now. I think that should be the key to see. How did you get that measurement down? Because I don't know how that one came down. And at what point you decided to stop? What determined the level you took it down and stopped before you now added the other thing?
I'm not getting you very clearly. Okay, let me start it from here. Let me now the other wave, we don't need to do anything about it. It's automatic. Once you press it in the market, it gives you the direction of the market. Let me start out fresh. Okay, FX indicators. Then you search for Elton wave. Let me start out fresh. Once you type it in, it gets into your screen, and there we go. All right, now this is the Elton wave. Are we okay up to here?
Yes.
Yes.
Now, the fact is, if we want to win our trades, we cannot use this indicator alone. All right? Because the market will not move in one direction. Yes, it will get there, but you want to have a perfect win. You cannot use this indicator alone, as it is a standalone indicator. So, I don't know whether... Yes?
How do you get this measurement? What determines this leg that's coming down, that is coming down?
Okay, what determines this market to come down here?
The market, this last trend online coming down. How do you get this? Like, if I want to take drugs on my phone now, how do you between this B and this C?
No, it is automatic. Once you put in the indicator, it will show up. I'm not the one who draws it. It is the indicator.
Okay.
Yeah, you don't need to draw it. You don't need to touch it. Once you put in the indicator, it will show up on your screen. Maybe you're on the 4-hour time frame. That's why it may not show up, but also it's showing up on the 4-hour time frame. So it is showing you that this market will come down to see, then it goes up again. All right, now, I was saying, let me remove off now this one. Have we all heard about the auto FBI retracement indicator, or I explain it afresh?
Please explain it.
Yeah, explain.
Now, this indicator is one of the best indicators anyone could use to trade. Why? Yes, the Elton wave gives you the direction of the market, right? The Elton wave gives you the direction of the market that Julius knows that this market is going to come down to C, all right? I hope that we are very clear. It has touched the tip, now it's gonna come down to C, I know. But I want to keep trading and make money. I need to understand to combine the two. Now, let me first make it clear. The auto FBI retracement line, this one indicator, it has important areas. One, if the market moves from 100, like you see it here, you see the market moved from this point here, from here, and it moved and it touched this line. You see that? It touched the zero. If you can see very well, this was this area here. The rule says it has to move 50% back and then get back to zero again. You see now, I want to show you. You see, from there, the market came and moved up to here. I've said that area is between 61% and 50 here. This area, the market has to move here, in between here. Then it goes back to zero again. That is the rule. So it can stop here on 50 or stop here at 60, and it did it. You see, it respected the rule, and it came here. It touched 61%, and it went back to zero. Have we understood that one first? Before maybe I continue with anything.
Mm-hmm.
Have we tried to understand that?
Yeah, at least we understand that first rule.
The fact that's a
What
rule.
you said, what you said, like, if the market moves from this 100 bottom and goes to the zero at the top, the rule says that it will come down 50% to where this percent is before going back up to touch the zero.
Yes.
Okay.
And you see it did it. You see this dotted line? The market moved from this dotted line, kept on moving, kept on moving, kept on, it touched the zero line, right? It then started to retrace from here. Then it came down. Let me change the color for you to see very well. It came down, down. It came down, down, down. It reached here. You see that? Then you see, if I change to yellow, the market moved from here and moved up to touching the zero line again. Have you seen that?
Yes.
So it is a rule. So once you put in your auto FBI retracement line, unless I didn't talk about the settings, and you see the coin moved from here to here, you just wait, it touches this line. And now we are no longer waiting. You know, Royal Q now gives us the what? The price alert. So you just go to your Royal Q, set a price alert, and wait. Once it touches there, it gets up and you're out of the business. Okay. I hope that one is okay. Now, let me show you other important areas. Now, these lines, they act as support and resistance. What is support and what is resistance? Resistance is that area where the market has failed to penetrate. For example, in this screen here, you see that the market has failed to go beyond here, all right? Now, this means this is resistance. And also at the bottom, you see the market has failed, let me say, to go below this point. This is support. So this acts as the wall and it acts as the ground. The ground and the wall, all the ceiling and the wall. Now, let me explain. These lines, if the candle, like here you see, if this candle closes below this line, then it has broken this support. It's now going to go to this, coming down. I hope you understand. So let me show you an important area. If a green candle breaks this line, you just need to understand it's simple, not hard. If a green candle breaks this line and it closes here, I'll get in the market because I know it will move from here. Now the market will fly to move from here and touch this line. Because it has broken the resistance, now it's finding a new what? A new resistance. And it happens in all areas. You see, once this green candle closes above this line, then I know it will go up to here. So I just can pick my price range and measure from where this candle has stopped, and I go to the second line here, and I'll take my 2.6%. All right. Then I say, where is it? It has closed here on 23 here. It has to go to 0 as a must. Then I'll take my 4% there. I don't know. Have you tried to understand this? Are we still together? Or I'm causing confusion?
It will be as if you're understanding and then you get confused.
Okay. Okay. Let me try to be a little bit slow. You see these lines, okay? You see these lines, they act as support and resistance. Like, you see that red candle that's being formed, right? It means the market is gonna move down up to this point here. If I want to trade, I cannot enter from here because the market might move and touch this down bottom. So if I want to trade, I'll wait for green candle to penetrate from here and it closes above here. Then I know it will go to the upper line. It's what I mean. I don't know how simple
I got that.
You understand?
Yes, I got that.
For example, let me show it to you again. Look at, you see this
Yes,
green
you understand
candle?
that part.
Yes. You see this green candle was formed here, right?
Mm-hmm.
But it moved from here. It broke this 38 line. You see? Then it closed above it. You see there?
Mm-hmm.
Then I don't need to ask for a signal. I know the next candle, if it starts as a green candle from here, it has to move up to the upper line, this one.
Mm.
You get it? Then I will just get my price range. I measure from where this candle has closed. Then I go up to the next line and I'll take my 3%. It's usually a guarantee. Why? Because it has tested this line, closed above it, and it has tried to test it here, you see? And now it cannot come down here. It has to move up, push up to the next line. Okay. So if I want to trade again now, this coin, remember what I told you, see it has formed this green candle. I cannot enter now. I'll wait for this green candle to close above. You get it? Then I wait for the next candle. I hope you understand that now. I hope you are trying to get the picture.
Yeah, we understand. But what time frame are we looking at now?
We are in the 1 hour time frame.
Okay, so it will take 1 hour for this to finish forming.
Yes, this candle will take 1 hour.
Okay.
Now let us add the Elton wave back because now you can get it clearly.
You said this candle. Can you hear me?
Yes, hear you very well.
So you're saying this green candle that is forming, that you will not enter the screen?
I can't enter because
Forming at 0 place there.
Yes, unless it closes above it, unless it closes above 0. But you see, Now it's because we are only using 2 indicators. I want to add in a third one to help you also make a faster decision. All right, and that is the stochastic RSI, which I know you know. Okay, now you see why I can't enter? You see, even the stochastic RSI is pointing down. I hope you see pointing down. Showing you a clear picture. You see the stochastic RSI? It is pointing down. You see this blue line is pointing down, it's facing down, showing you that this market will go down. Although it is a green candle, unless things change and this candle faces up, then I can get in. I don't know that you see what I'm saying.
Okay, so but is it possible for you to change this and use maybe a lower time frame?
It can change depending on the volume.
Can you change it right now so that we can analyze using a lower time frame instead of 1 hour, maybe 30 minutes?
This is 4 hour time frame. You see? Now, do you know what will happen here? If I'm gonna trade in this time frame, I just get in. You know why? Remember what I've told you? Because it depends on the time frame you are trading. It has closed above and tested the line above. So I know it will move from here and it will go to this 0.5. So I'll take my 2%. I'll take my 3%. It has to get there. I don't know that now you get the difference. In the 1 hour time frame, I cannot enter. You understand? Because the stochastic RSI is pointing down. You see? But in the 4 hour time frame, I can get into this market. Why? You see this green candle, this one, the first one, it closed above line 38, right? And this line 38, the next candle has started up. See this space here, it has tested the line. So it can move from here and touch the 50 line, the new resistance here. I don't know if you are getting me.
Yep.
Next line is the 0.5 line.
Yeah.
Yes, it will come back and touch the 50 line here.
Yeah. Okay.
It has to do it.
Okay. Yeah. Okay.
Because this was the new, so the market is fighting to touch a new resistance. I don't know if you understand me. It is fighting to come back here. What could make you want to?
It's going up.
Yes, exactly. It will go and touch the 50 line.
Wow.
What could force you not to trade this trade is only one. It is only the stochastic RSI if it decides to point down.
Okay.
But if it is as it is playing there, if you are smart enough, you take your 3%. All right?
Yeah.
But if this stochastic RSI was around this area, just look around this area here. There I have no questions. I just get in. It's facing up, very sharp, giving me just come and take your money. But here it is in the oversold area. It has sold over 90%, right? Look here. You see this red line? It is drawn on the 9th area. It has oversold.
Yeah.
So I'm getting there in the market, but very risky. So this is not the best time. You know, when you want to trade, you want to get in at the best time.
Yeah.
So this is not best. But if it was in between these areas here, it was the best time. Okay, I hope you get now the difference.
Yes. Yes.
So if you want to trade, you cannot start with the you cannot decide to stay. Okay, let me say, for example, I want to get in the market. You don't start from the 15 minutes. You don't get excited from the 15 minutes. All right. You want to see. You see now this is an uptrend, right? You see this is an uptrend. This is an uptrend because this is a 4. It has to go to 5. This is 15 minutes. Just look at this. This is 15 minutes. It's a good trade. Why? The stochastic RSI is just here,
It's
right?
pointing up, yeah.
Pointing up, right?
Yeah.
Our market moved from 100. Just see, it moved from 100 to 0. Look at these areas. It moved from 100 to 0. It has retraced 50% of its journey, which is exactly at this line.
It's going back up. It's going back up.
This is how sweet it is that you enter with confidence. And this is 4. This is 4. It has to go to
5.
5.
Wow.
This is how sweet it is. But before you enter the market, you want to first find out in the longest time frames. You might start from maybe 4-hour time frame. Is this an upward trend? You want to first confirm this is an upward trend or it's a downward trend. The stochastic RSI is pointing down, but this is still a green candle. All right, 50, 50. Then you go to the 4-hour time frame. Is this an upward trend? A little bit, but not very clear. It's just it's not clear. It's not one where you make an instant decision. Right? Then you go in the 1-hour time frame. Then you see, is this an upward trend? It's not a clear upward trend. Then you cannot come and place in your money at the 15 minutes time frame. You understand what I'm saying? I'm trying to say, if you want to pick good profit, because you might enter with excitement, but then the market pulls down. Pulls down. But if you are a scalper, this you can trade because coins like MDX are very volatile. Let me show you why. This is already 2%. Now, remember, your take profit is determined by how much amount of money you have invested in the coin. It doesn't depend on the wave. If you put in a one shot with $5,000, 2% is enough for you. You don't need to look for 10% that other people keep on talking about in the group. Why? Because a floating loss of 2% is finishing almost your money. So someone with $50 can go 10% because they have nothing to lose. But if you go in for $2,000, 2 to 3% is enough for you. That's why you want to first confirm your trade before you get in. Let us find another coin we can look at, all right, so that you can get a clear picture. Let me bring in ref.
Okay, so I just wanted to confirm something here.
All right, I go back.
No, you don't need to go back because I mean, for me, I always like to pick a certain number of something, be a master on it, and then use that to to do whatever I want to do. So basically, on this, on what you've taught us, I can use the Elliott wave, I can use the retracement, the auto retracement indicator, and the RSI to confirm my trade before I go in, right?
Yes.
Those 3 indicators are good enough for me to use to confirm and go in. That's what you're saying, right? Perfect. Because I just need to know 2, 3 and practice it over and over and over. Do you understand? And perfect it to be able to go into a trade. That's what I wanted to confirm.
Yeah, sure.
Okay, thank you.
It's one of the areas. Now, for example, you see ref in the 4-hour time frame?
Yes.
I just want to show you. Okay, what are the features you look for? 1, 100 is down and 0 is on top. It's going to be an upward trend. You see, no matter what this wave is speaking, all right? If this stochastic RSI that is trying to point up points up, and you see these candles have been testing this line. Do you see the 38 line, the 38% line? It is acting as support. The market has failed here. I don't know that you see. It failed on 4 hours. It failed here, and it has failed here. You see this area here.
Yes.
The market has failed to break this area. It means it's support.
Yeah.
Now, once this stochastic RSI points up, you don't have any request. You get in because it's gonna move from where this candle is now, right? Where this candle is, it's about to point up and move up to this line. Now, like I've said, that the amount of take profit depends on your capital. I want to show you this guy who trades with $7,000. Let me see if I can find him here. I saw him making an argument on the group. He now feels like he's killing it. Let me show you. People are making money. Okay, 14%. This is sushi for our time frame. Okay, wait for a green candle. Wow, she's happy. It has now formed a green candle. I'm going up. You see, she now knows it has formed a green candle. She's going in for 14%. But that is too much. That is too much. Too much take profit. Okay. Okay, it's a good trade. Take 5%. Now let me show you this guy. He trades with $7,000. He has a move to break his previous record. That is his trading strategy, right? This is his trading strategy. He uses $7,000. Okay. I hope you see his returns.
Now, so you're saying his capital, his trading capital for this particular coin is $7,000.
No, his total amount of money.
Okay.
In his exchange is $7,000 when he was starting. All right.
Okay.
But you see, his profit differs. What differs his profit is okay, I understand him. He sometimes develops fear. But once he invests in the money, the maximum he takes is 2% and is out of a trade. 2%. Maximum, even sometimes takes 1.5. All right, maybe that is too much. Let me show you this guy. He trades with $2,000. Okay, let me see if I could find him here. All right, here you go. Let me find some of his previous trades. Then I show you his current. Where are you? All right, here we are trading strictly with $2,000. And here we are only exposing 250 around, I think. They are close to $250 because they are devolved here. But then today, we did a Zoom. He became more confident. Using $1,600, look at his return. $1,600. Look at his return. $153. His maximum take profit is 3%. Because when you expose $1,600, once this money floats, you lose a lot. Especially if you put in it once as your first buying amount. Although I would advise 7 margin calls. I'm going to talk about that because it reduces your risk and also it can give you more profit. I hope you see the difference. Now, you see what I've told you? Once this points up, someone gets in and their confidence going to move up. So if you expose too much money, it's a bad practice for you to love all this profit. You say, maybe I want to take 3-4%. 2% is enough for you. And you're out of the market. The goal is to get out as fast as possible than to stay in the trade.
Okay, please, can I ask a question here?
Yes, please.
Okay, so I just before you went to check the Suppose account, you were saying something about that when we put up the auto retracement indicator, and we noticed that we have the 0 down, and I know the 0 up and 100 down. It shows an upward trend. Abby, okay, so
yes.
Does that automatically come up? Is it possible that you put up that indicator and the reverse is the case?
Yes, this is the scenario. This is the scenario here.
Awesome. Okay, awesome. Now I see.
You see here 0 is down, right?
Yes.
And 100 is on top.
Awesome.
Now, this means that it's gonna be a downward trend. Okay. The simplest is that the previous trend was a downward trend. That's what it means basically. But it's gonna still be a downward trend. This is the previous trend. You see this? It was a downward trend, right? But what could give you the confidence is that because you see A, you know exactly it's gonna form B, right? From A, it's going to form B. So, you know, this indicator is good because it shows you where the market will go. Now, the use of this one and the auto FBI helps you to keep in the market. I know you try to understand me, even if it shows a different direction. For example, if you see line 38, use these lines as a support and resistance. You see from here, it will go back to 50. Because the stochastic is refusing to bend down. So it will go back to 50. It will touch it because it's refusing to go down. But like I said, that if you have mastered the game with practice, then you see you can enjoy such trades. You see this one? You can trade it with practice because you now will find it much more easier for you. I don't know if I've tried to answer you, but if you find such, let me show you here on 0.
Okay, so I just noticed that when you change the 15 minutes time frame, the auto retracement now changed to 100 down and 0 upwards, showing that you can actually, it's an upward trend, right?
What you do when you're using the auto FBI retracement line, keep in the time frame you are using to trade. It will confuse you because it will be different with a different time frame. You get the difference? I don't know that you understand me. This is 1 hour. The auto FBI retracement line will look different in the 1 hour than it will look in the 15 minutes. It might even be different in the 4-hour time frame. You get it? But because you understand that these are support and resistance lines, right? You know, it has failed to break here, all right? It has to go up to here. And the stochastic is not bending. There you are getting smart. Although this line is pointing down, I don't know if you understand me. This is pointing down. The market will go there. But by using these 2 other indicators, you still keep in the market. That's the most important thing. I don't know whether you get me now.
Yeah.
Yep.
Because if you use one indicator, you will say, aha, now this thing has touched here. Now I wait up to here. Then people keep on posting results and feel like, what am I doing wrong? Because you are only using one indicator to determine your entry. Do you see how the market is refusing to respond to the trend? 100%, because if this candle closes above here, this one here, then it's gonna go back to this line here. Because the movement of the market It's like even if it's gonna go down in the downward trend, it doesn't move like this. No. If it was here, it moves down, comes up, moves down, comes up, moves down, comes up, moves down, comes up, moves down. All right. That's how the market moves. It doesn't move in one straight direction. So it has moved down here. It comes back a little bit, then moves down a bit, comes back a little bit, then moves down. You understand?
Yeah.
Yes. Yes.
So you can still profit during these areas. I don't know if you get me. This is money than someone waiting for this area because you are using other indicators to help you. I don't know whether you have understood me, but if you find areas like these, for example, let me use this like these ones, you can enter. All right. You don't need these ones, you don't need any other indicator. You can enter from here. You just see it, you get in. For example, if someone got in from here, they have taken their 3%. So once you see it, you can enter. Like for example, let me see if I'm trading this coin. All right. I'm trying to trade. I need to just open up margin calls. A few of them. Because if I don't open up margin calls, I will stay with the same average price. So I need to open up more margin calls to move this closer so that I can get out of the market. I don't know that you have got it, or you can still go in again so that you can understand. But the perfect entry is when you find you find the stochastic pointing up. If you see a 4, the market has to go to 5. Right? The reason why you see it here because we are in the lower time frame, all right? And you have understood that the market doesn't move one direction.
Yeah.
So it will move up. It will move up because it's in a shorter time frame. Move up a little bit. It can stop around here, then it comes down. You see the stochastic has changed. You see it down here.
Yes.
Yes.
That's why it's not good to come in so much in the lower time frames. They're very risky.
Yeah.
Very risky. Very risky. There's a lot of noise here. So you stay in the either 4 hours or you stay in the 1 hour time frame, unless this points down. But it's also risky to trade when the stochastic is above the red line. So if it's below the red line here, you can trade. There are good examples of good coins doing this very well. Okay, the other thing I forgot to tell you, sometimes the indicator will not show up on certain coins. Don't get annoyed. It will only show up on a coin it knows that will perform well. All right, so you don't need to get annoyed about it.
Okay, Leader Julius, can you help me check a particular coin, please? Maybe it would, I don't know, CRO. I told Dr. Money I'm actually, I have the coin CRO. As I yesterday was doing like 2,700. It's gone up a little. I think it did about 4.6%. But I wanted to know if there's any need holding on to the coin, or I can as well just sell it.
Using which exchange?
They're using their own crypto.com.
Okay, let me use KuCoin.
Okay.
Right, let us create support and resistance areas. And we see. Let me get off these indicators. Okay. All right, let me first look at it, maybe using these indicators so that we can see. It doesn't show up in the 4-hour time frame, it's only showing up in the 1-hour time frame. It will move down a little bit, then move up.
To move down before going back up.
Yeah, it's gonna move down now. You see the
Yeah.
stochastic RSI?
Yeah, yeah,
Yeah,
yeah.
that shows.
It's pointing down. Yeah,
move
and
down.
red candle. Yeah, it's going down.
It's coming down now. Okay, now let us draw some support and resistance areas, all right? And see if it is good to hold. I'm gonna clear the screen. I see some balance areas. All right, let us draw in the 1 day. Let me draw them in the 1 week. Okay. So when we are drawing support and resistance lines, we don't go far. We look at the immediate lower low. This is the lowest point in the market. I hope you see it here.
Yeah.
So here we draw our first line. We don't create horizontal, we don't create support line, we call support areas.
Okay.
Now we look at where the last green candle closed, all right? So that is our support area. Now we go to the nearest highest point in the market. It's here. Hope you see it here. Then we draw another line here where the red candle started from here. You see?
Okay.
Now that is our support area, right? So if you want to go a little bit lower, we still can come and draw here. You see that highest point in the market here, this red arrow here.
Yes.
Can draw another line. Then where this red candle still closed, we draw another line. That's support area too. If we are still interested, but this is very near, we can still come and draw it here. All right. Then draw it there. Okay. Now this is in the 1 week. Now there are so many, just to help you because you want to make a decision, right?
Yeah.
Now let's go back to the 1 day and see the respect of our lines. You see, it has respected our support. You see it? The market has not penetrated our lower lines. You see it?
Yeah.
Up to that, it has respected. It has respected. Now, you have a sure deal, it's gonna move up to this upper line. You see this upper line here? 0.0. It will get there as a must. Let me remove this. It will get to this price. You can either sell at this price.
0.41.
You can sell at that price. It will get there. It doesn't matter. The market will meander. It might reach here, come down, but it will touch that line.
Okay.
Let's go back to, let's lower the 4-hour time frame. I hope you see it is respecting our support. But you also see the market is struggling to touch the upper resistance line. Be on a sure deal, it will touch it. It's still the same price, but the market might take long, right? It will meander. It will do this, but it will touch it. So that could be your first sell point. Let me take you to the lower time frame, 1 hour. Hope you also see the same thing. It has respected our support. It has ever touched the line before. Hope you see it. But you see, I hope you see all these upper lines. So you can make a decision to sell from here. If you want to hold or to sell from the second resistance line here, 0.01181, or you can sell. So you can sell from this one, or you can sell from this one.
The problem is how long someone will have to wait for it to get there.
Yeah, but you have made some profit because I see this was a strong balanced line. Okay,
Yeah, very little profit. Very little profit within 1 day, really, because this is a coin that was worth a lot, and then right now it's worth less than 2% of what it was when we got it some months back. So
yeah, but you can wait to sell at this upper part because okay, let me show you something. Maybe. Let's see if I could show you this. Okay, but, okay, let me add in some. Let me add in some indicators. I don't know whether they are here to help you again so that you can see. Let me use this too. What are these? Moving average is 20. It's good 200. What's up? No, no big business. It's still bearish. It's not even a quarter bullish. But it will touch the line if you remain patient. I don't know how long it can take. Let me see. From here, if it comes down again before you sell. If it comes back here before it sells, it will take some more 11 days. But if it picks from where it is and it goes up from here, it can give you some 5 days if there is good volume. Let me add another indicator here. Do they mine this coin? Is this coin mined?
I'm not so sure anymore.
All right, let's see. Let's look at its mining history. It had a buy signal here. Okay. No, it will touch it. Just give it time. It will touch 0.11141 to touch it.
Okay.
If it does, it can even touch it sooner than you expect. One last indicator. Yes. Oh, it has good volume. Don't sell now.
Okay.
Okay, let me change the candles I confirm. Oh, don't sell now. It has some good volume. Wait for these 3 hours. I don't know. It could close. It could close and touch the upper line.
Okay.
All right. I don't know. There is another question.
Thank you, Julius.
All right. Maybe lastly, I should go back here now. When you set up your margin calls, right, you should at least be in the sub-bin mode. At first, I didn't understand it, but I don't know if I have some more USDT for this particular coin. Oh, there's no. It is 38. Right. So once your robot buys like 6 margin calls, 6 or 7 here, 6 or 7. If you put in the sub-bin mode, it will help you because Once it sells, it will use your profit to move this average price closer to the current price. Then you putting in the sub-bin mode real-time settlement and take the profit. So you better invest the profit back in the market so that you get out of the coin earlier and faster. So you can push any trade that is in floating loss. You just open margin call. Once the robot sells the margin call, it moves your average price closer to the current price. Keep doing it, keep doing it, keep doing it. And within a few days, you're out of that trade.
So how do you move it? How do you do the sub-bin call that you're talking about?
You just open more margin calls. For example, I open call number 6, right? And I say, let me say I want to use $300, correct? Then I say, let me say 15 times 21 or 15 times 10, which could be around 50, 10 plus 150 plus 150, which could be 15 times 20, which could be around $300, all right? Then I save. Then the robot will buy the 6th call. Then it will sell it. Once it sells it, it will give me back my $300, but it will use my profit to move this average price closer to this current price. And very, very soon, it means the 4 margin calls can be easily sold faster. All right. Thank you so much. I don't know if there is any other question for clarity.
Thank you so much, Julius. Thank you.
All right. Thank you too.
Thank you, Julius. I think I have
Thank you, Julius. I'm going to any more.
Yeah, sure. Thank you so much. Anytime you need me, I'm available. Can be able to share. Okay, I'm going to send you the recording.